All right. Hello, everyone. So I've set up the streaming system and it's going to be streaming now. So this is the Forex algorithm discussion part one. Now I've added a brand new asset, GBP Aussie dollar, to quote unquote kickstart the algorithm discussion for you all. Now, first and foremost, what is the algorithm? The algorithm in Forex trading is not retail knowledge and it's mainly psychology. The algorithm is simply put understanding where the money is in the market and where the stop losses are in the market, where the take profits are in the market, and where you stand in the market. These are the most important things that many persons tend to neglect. So let's type it out. Where are the players in the market? You have two players. You have players that are making money, which are the SMT traders or smart money traders. And you have players that are losing money, which I was in that category for some years, retail traders. No, retail traders do in fact make money, but they don't make money in the real sense because eventually they end up blowing their account. And a smart money trader, he or she can also blow their account if they are not following the rules, where humans will tend to make mistakes. But as time goes by, a smart money trader, often given that he has the correct concepts, he actually knows what to look for in the market, he or she will eventually, as I say, as time go by, discipline themselves to ensure that previous mistakes are not repeated. When I started to understand where I was in the market in terms of market liquidity, everything began to get a lot clearer to me. And these tutorials that I'm doing on this channel are nothing like the previous tutorials I did in the past. I used to pass out knowledge that I gained from other channels, other mentors, and still lost money, still blew my account. And then I realized that if I kept up that information online, I would be doing a lot more damage than good. So I deleted videos on my other channels that was presenting information that wasn't helping me, wasn't helping others. I even got to my Telegram group, started back from scratch with a Discord group because my Telegram group was just filled with a lot of spammers, persons coming in from different groups, advertising signals, everything. Discord gave me a lot greater control. So, oh, and I also stick to three assets: GJ, GU, and Gold. Those are my primary assets that I trade. It's just recently added Dow Jones and Nasdaq. Now, this retail knowledge is so well found online that it's no surprise that so many persons are losing money trading Forex. If the information that was algorithm trading was more online, more seen, then I guess the market maker would have to tweak the formula just a bit to level out the playing field in that a good substantial amount of persons give up Forex trading after a while because they have never seen true success. Only the top players go on to matriculate to the next big level. So here's the algorithm right in front of you. As you can see, I'm not using any indicators, but I already have a template in my mind, and I'm going to break down the template for you step by step. So step one, start at the history. There are two types of market movements: market flow, which is a true long term historical move of the market, and you have the order flow, which is what the market is doing currently for that year. Each year, the money or the capital that is needed to move a asset price up or down or whatever direction they want to go, whether it's a trend range, consolidated range, or just range it overall, the money has been inputted. No matter what news release comes out, the money has already been factored in and the move is going to take place. So once you get an understanding of the market flow, you know where the primary direction is. You get this information, or should I say, within the first 3 months, but it's actually from the month of January. The first initial capital is set. But the month of March is often known as a breakout month where the market move money is actually, or should I say, the money that they allotted starts to take full effect and you see the direction that the market price takes. This month is a good time for those who are swing trading. Um, essentially because it puts you in the early zone. Now, you start at the history first. Now, step two. And this is just getting straight to the point. Where are the navigations? Now, this is where technical analysis starts, and it boils down to H4, H1, and then eventually the entry time frames, which is gonna be in step four. But before we get to the entry time frames, step three, where are the current players in the market? Where's the money? Where are the stop losses? Where are the take profit? Where are you currently in the market, given that you're just coming in? All right. Once you have identified that, you go to step four. Can I enter this trade now, given the information analyzed? Can I get this information right now in? What the heck is up with my spelling? Is the yeah. Can I get this information in now? Now, how am I gonna do this? I can enter on the M5 or I can enter on the M1, but can I enter right now? So the last step is the most important step. It's the psychology. The psychology comes into play in that you have to see to it that your mindset, your focus, everything is on point at that given moment, and you're not positioning yourself in such a way that should the trade go against you, you're lining up yourself on a downward spiral to eventually blow your account. All right? So I'm gonna start right about now. And even if you tweak it, you do one part before the other, as long as you follow this formula, you should be okay. But don't forget about the psychology. So I'm on the higher time frame right now. So I've already started from the history. So the GA is currently going down at this present moment. All right. So algorithm move starting now. Let's go on the daily chart. I have to get that information given where the previous week was, what the current week is doing, and whether or not this trade is going to be profitable with the remaining days. You have to consider today's Tuesday, right? So Monday, Tuesday are the days in the week which the market price sets a higher low for that period. Can I now jump in at this point, Tuesday, and Wednesday, Thursday, Friday, I see a profitable move? Furthermore, am I going to do a day trade, or am I going to scalp, or am I going to swing trade? This becomes increasingly difficult if you're good at all three styles, which is what I'm good at. But I've reached a level now where I can say, all right, if I see a swing trade setup, I'm going to take it. If I see a day trade move, I'm going to take it. I'm not really good at scalping, but if I do see a profitable scalp, put myself in the mindset for that, that's it. While ensuring that I only risk 2 to 3% of my total account balance and that I don't overexpose myself in the market. Close down the laptop, go for a walk, get some chores done, focus on the fact that I've set a withdrawal target and I have to reach that withdrawal target. All right. So this week started on the 3rd. All right. So let's get the third. Let's break it down to the 4 hour chart right about now. 4 hour. We're really making some progress right about now. So this is way in October. So let's go to where we are right now. And as you can see, there's not much really going on right at this present moment in terms of the overall movement of this asset. But opportunities are ripe, right? 1 hour chart now. Notice all I've done right so far now is just drawn one line, but everything shall surely come together eventually. So let's get the start of the week. I'm gonna start it right here. So on Monday. Uh-huh. Wait a minute. Why is it saying 12:01? What's up with that? It's saying 12:01. Is this a glitch? Well, anyways, don't know what's up with that. Because I know I didn't mess with the clock. But anyways. Alright, so start of the week. Now, next thing, I can take a look at the previous week. So, as I mentioned, so the previous week would be the 27th. We're just in the first of the month period. That's essentially where the opening range is at. That's where the market price, quite naturally, we look for it to quote unquote set the opening high, opening low, all these type of factors for the trading week. All right, so here we go all the way to the 27th. All right, cool. Now, why am I seeing? I'm still seeing. I don't know why I'm seeing 1201, but anyways. So now high of the previous week and low of the previous week. So the market price has a big, massive range that can potentially be filled or fail to be filled and price continues to break down. Let me explain this. Given how much of a strong sell-off took place on this asset, market maker can either A, put these guys deeper in profit, or he can continue on this market pullback, run their stops, and then continue to drop the price. Either way, there's going to be opportunities for us to make some money. So now that we have identified the highest and lowest area, we can start off by identifying the low that has been set from Monday, just to kind of help us. It's not really needed right now, but it's gonna help us. Now, the next thing we have to take a look at is the highest here that has been set so far. Now, the week hasn't come to an end. So none of these are set in stone, right? You navigate your chart to your liking. You color your chart, you color code it to your liking, no problem. So I understand that these are the highest and lowest here so far. Cool. The next step that I need to take a look at is what is the current market price doing in terms of overall movement? Now, obviously it's going down. But this is a very most important step. Where are the take profit? Where are the stop losses? If I was a seller here, my SL is here, right? But if I was a buyer here, and I'm definitely seeing my profits disappear, let's just put B for buy, my SL is down here. Now, clearly, the buyers are being what? Neutralized, right? Take a look. Buyers are here. Many of them took profit. Some of them sadly bought at the top, and now their stops are being ran by this current move. The sellers are here, and the sellers are the ones that are currently in profit. Now, you, well, us, yeah, just example speaking, we have not entered the trade yet. So we are the current players in the market that are getting ready to jump in. Now you have to jump in on the side in which where the money is gonna be at, not on the side where the money is gonna be taken from. There are two types of liquidity: positive liquidity and negative liquidity. Positive liquidity, your take profit is being hit. Negative liquidity, your stop loss is being hit, right? So with that being said, if I jump in and I sell right now, am I putting myself in an advantageous position or a disadvantageous position? Yeah. Now, going look further down, each move has a starting point. Let's mark out Tuesday. Each move has a starting point in Forex. And yes, Tuesday has given us the highest era so far for this week. Uh-huh. Now, each move, as I said, has a starting point. So the buying started right just Monday. And here's Tuesday. Tuesday obviously hasn't come to an end. So we're 50-50 in this or current grand scheme of thing. I think even Tuesday's open is almost at the 50 mark. Now, for the days to come, I have to consider Wednesday, will the market price A continue to sell with confirmation, or B, will the market price hit a higher low, daily low, and then I start to see some buying take place, meaning that the market maker would undoubtedly be looking to run these stops. So this is the move that I have. Now, I'm not going to base it off of Tuesday because Tuesday hasn't come to an end. Given that the market price made a maximum here and a minimum here, I'm going to find the halfway point or the sweet spot in between these two current days. I already understand that the market direction is going down, bearish. I can't do anything to stop it. What I can do at this present moment is mark the 50 point or the equilibrium. Now, this is going to greatly assist me in the days to come. Why? The two parameter days in the week that assist us in understanding the high and low for the overall trend of the week are Monday and Tuesday. Monday can set the low of the week, Tuesday can set the high of the week, Tuesday can set the low of the week, Monday can set the high of the week, vice versa. And then Thursday, the market cycle come to an end, and Friday is a stop point day, with Wednesday being a midweek reversal. That's just basic market maker formula. Scenario number one. Market maker continues to drive the price down to run the stops of every single buyer who is currently still holding on, which would undoubtedly, if it breaks the low of Monday, give us a brand new low, keeping with the formula. And where market price finds that sweet spot, then we can proceed to look for asset price to do what we call a market correction, meaning that it pulls back and tries to target every single seller that is now knee deep in profit. Because remember, this selling is actually a continuation of the selling that took place on the previous week. I'm on the M15 chart. That is scenario number one, right? Scenario number two is going to be presented to us in the form of market price finding a higher low, then pulling back and going after these guys, right? Now, which one we need to look for? Confirmation analysis is key. In that, if I don't see, based on my current navigational setup, the market price showing me any sort of hint of price going back up, I ain't gonna take the trade for a buy. And if I see market price continuing to sell, if I'm planning to do an entry on this, I have to see first market price pull back, because at this current era, I cannot enter here, which brings us to the entry time frames. So 5 min. No, not 5 months. I said 5 mins. 5 minutes, yeah. No, take a look at this. At this present moment, nice to sell off. Wonderful. But it's choppy. So I see some deviation points. I see market price planning to retrace. All them stuff there. Basic stuff. Yada yada yada. I gotta see a pullback, a retracement, plus a rejection if I'm gonna continue to sell. I cannot under any circumstance in the life of me take it where it's at right now. It's not good. It's not a presentable setup. And if I take this trade right now, more than likely, I'm putting myself in a disastrous position to lose money, right? So I have to ensure that I see market price. Now remember, you're already late. Let's do some discussion, right? Roof, lower high, right here, LH, lower high. Right here, so would be the initial structural low. So look at basics I'm giving you guys right here, so. You got a break of structure at this level, BOS. Market price came, made the first stop, wipe out those who sell at the bottom by shooting back the price up. Wipe out those who bought right here, so by sending the price back down. Did I repeat? Did I repeat? But each level, you saw market price. I'm use the marker for this. Increasingly showing you that we're getting lower, 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 right? And notice how irregular it is. So patterns can really mess you up because I know this right just attract a lot of persons. That is why I don't focus with patterns. I focus with market flow direction. Sorry, order flow. Yeah. Market flow, order flow direction, and where the market maker is going after stop losses. The moment you think stop losses overtake profit, Forex trading algorithm is going to become a lot clearer to you. So by all indications, I cannot under any circumstance place a sell right now. If I were to place a sell right now, I would be doing what I call a retail rookie mistake. And as a SMT trader, I cannot do that. If I sell right here, so my stop loss is in this vicinity. So it would be a ripe opportunity for the market maker to then pull back the price, run my stops, fail for break past equilibrium potentially, and then send the price all the way back down. So I could put up a local scenario, say selling continues if this lows get taken out, but I'm honestly anticipating that to happen. But for the sake of knowledge, all right, let's put a local bracket here. Let's put a hypothetical local line, just a local line for just my purpose. or most of the smart money traders are done for the day. So I'm looking for a little pullback, but let's put selling continues. What is up with my vocabulary these days? My spelling. Selling continues if low breaks. Need to back up my dictionary, Anyways, so right here, this is just a temporary local structure. I'm looking for the pullback. If I don't see that, take a sell, then I'm not taking it. That's how you reason out your Forex trading algorithm analysis. Let's do one more, shall we? Let's go on my wonderful, lovely asset that many persons are making a killing off of, gold. Now, this chart is already laid bare in front of you guys. I don't have to do any much more markups, but it's a discussion type of tutorial, so let us continue. But I'm just gonna focus on the key area. Some of these I'm gonna delete. I think I can wipe out the chart. Just a little bit. These are from previous tutorials, so let me clean up this just a bit for you. Oh yeah, when you're doing your navigation, see to it that when certain areas have completed the move, if it's not gonna be in your current site of navigation, meaning that this area is not relevant at this moment to your current analysis, clean up your chart. If you're not labeling your charts properly, it can become quite confusing, but some labels you cannot delete. For example, these by stop loss, I can't delete those. Those are my navigational blueprints. But the rest, from previous weeks, they can go look at arrow here or there and so on. Fail to break, Friday opening over low. This can stay. This is important. All right, so let's quickly focus on the current market area. So I'm on the 4-hour chart at this present moment. Back to you now. Here we go. Let's go on the 1 hour. 1 hour is gonna make my job a lot more easier in explaining what took place here. So now I have to go through the whole thing, but for those who watch the previous tutorial videos on the channel, you would have already understand what this means. More selling if price breaks Tuesday's low. That in fact happen. So these guys who were on the buy earlier, their stops got ran. I place a stop loss right down here. Now let's focus on here quickly. So I have a range, right? I have a market range. Now somebody is in profit and somebody is not in profit. Let's take a look and see who is in profit versus who is not in profit. So I'll get you out the way you no longer needed. So let's put buyers here. So B for buyers. And let's put SL here for stop loss for those who got in right here. So on the 28th of September. Cool. Price came up. More buyers entered here. Market price came. Then price for to break this roof. Sellers came in. So those who bought right here, so their stops got ran because their stops, if your stops were tight, they would be essentially at a closer level. But those who bought here, they're still in the money. You guys seeing this? Those who bought here, them still in profit. Work with me now. So price came back down, did a correction, retested the roof. So the stops of any single seller who move your stop loss to break even got taken out. Remember, this is a inside range of a inside range. So we have two ranges, one bigger from up here versus one that's here. But right so is the key level. This is the sweet spot that price has to break. So let me get a different color. I may color it gold or so to signify the importance of this zone. I'm gonna just draw, no, not draw a line right here. So I'm gonna just put a box signifying what happens when that area is broken. Cool. Now price came back down again. So sellers have re-entered the market. So sellers are on this next wave and their stop losses are here. SL. Work with me now, boys and girls. And then more sellers entered. So for those who good on adding multiple, running the move, for those who saw that the market price was clearly rejecting to take out back this crown, they would have undoubtedly sold at every single peak and they are currently in profit. Now price is below the equilibrium area of this current price range. Now price dipped down, gave us a tail wick, and now what has happened? Simply put, In order to confirm buying is making a comeback, price has to break and stay above this price zone. So this is the sweet spot that market price has to go over. I know many of you are currently looking at it and say, well, the moment a candlestick form right, so can we buy it? No. Let's go a look a step further and show you what would happen to you if you bought right here. So this is a correction attempt, right? In Forex, a correction attempt takes place when after a market run has taken its course, this order flow has taken its course. Right here, so you have a ton load of day traders present. This correction attempt is the buyers, or should I say the first wave of buyers, seeing if market price is going to go above this critical zone and give us signs that gold is back on the rise. Don't get me wrong, anything in the lower 3000s, 393, yeah, these are some pretty good zones, but you have to be mindful of this fact. You don't want to put yourself in a situation where you're on the wrong side of the market. Notice why I keep repeating that. So, roof, impulse. This is always mark where the movement stop. So this is where look consolidated range, impulse. So we are above. So we're roughly 50-50 on this zone. So just I'm being lazy right now, but bear with me. So roughly 50-50 on this zone. Cool. Now, if you were to buy right here, so you run the risk of the first wave being stopped out, and that's most likely the case, price going below, and even potentially setting a new low before eventually ranging and then making the tumultuous climb back up. So at this present moment, that's why I love tutorials like this. It gives you real-time answers. At this present moment, it is not wise of you to place an entry at this moment. So anytime you can, well, this is streaming, so you can't really pause this, but yeah, pause this when you replay the stream. When you see moves like this, if you were to place a trade right here, so you're in trouble. Now, how do you caught the market move when the asset price was here, when it was doing this, and you caught it when it was doing this? Congratulations, you bagged some pips. But at this present moment, it is not wise of you to place a trade here. There are a ton load of sellers that want to send this price further down. And if you put yourself in that era, you are in trouble. Every single person who bought here, their stop losses is right here. So, all right, I keep on typing it out. The more I do this, the more my subscribers and my students gonna catch on the formula. If I was a market maker, I'm looking to go for your stop loss. All right. If I see right as I get respected, price rebreaks and then starts to do what needs to do, something akin to this, come look a brush, respect the low, then rebreak back that equilibrium zone and then start to climb back. Oh, wonderful. I'm looking to tag on one of these areas. But remember, price has to break and stay above that line. Am I typing too fast or is my vocabulary really getting terrible? Right. I have two D's on that and why. Anyways, so that's it for goal, right? Skip. Next one. Let's take a look at GJ. A big favorite of many of you guys, but as of lately, you guys not really talking about GJ. What's happening? One time, GJ used to be such a famous asset. All right, I did this video earlier where I was explaining the AMD model. I start out with the accumulation, the manipulation. The sellers went into the zone. I started out where the different stop losses are and the subsequent move. But as I said, I'm going to clean up the chart just a bit and focus on the current era. There's a setup right in front of us, boys and girls. So it is my duty to prepare for this setup. So all those who are watching, yeah, I'm not going to delete the manipulation, but I'm going to delete some of the earlier stuff. Current, perfect. And I think we'll wrap it up right there. So for this first discussion, I'll close off with some little talking points. All right. So H1 chart, 1 hour. Let us begin. Now, step by step, I might label this more a bit. So seller still present in this zone. Market price made a massive drop. Smart money buyers entered. Yeah, price came back up. Now, this was the key thing. Remember, we have a price range where price failed to establish a true new high, which resulted in this big sell-off. Oop, oh shoot, I moved the line. Come on, right back. So we had a range, a low. This is from a previous line. Delete this. And we had an equilibrium area that market price had to stay above. So upon justification being given, and be mindful, this is something that I have to stress. Once you see strong moves like these and the counter move take place, even when the market price reaches a crown, because this actually is the first wave, even though you got a justification set up, this is still the first wave. Because why? What was the criteria needed for you to justify that you're going to continue to hold on to this trade? It's quite simple. You had to see market price stay above the equilibrium area, above 50. That didn't happen. You see, when scenarios come like this, after you have done your navigation, after you have made some profit, this is how traders lose money on moves like these. Be, be real with me, people. Anybody would be glad for a buy move like this. Anybody in Forex trading would be glad. And the point of the matter is, I would be glad too. But you can't make your excitement cloud your judgment. You see, the point of the matter is, if you had labeled this chart properly, which by now I'm hoping that many of you are doing. Let me get this out of here quickly. Look, right as the buying continues, this was the manipulation zone. This is where sellers enter the market. Just quick look a recap. So you have a 100, you have the 50, and you have 0, max out zone. So the bulls are definitely trying to send the price back up. We have two powers buying, selling, core basics. Now, if you understand that once 50% of a zone is taken out, that's some, wonderful prospect for the current direction if you're a buyer, yeah. Um, what happens when the market price? This is where question mark needs to be put in. What happens when the market price essentially fails to stay above this area? That's a thing. I think this might be the highlight of this current algorithm discussion. It's the basic stuff that is tripping up many of us. You mark up your chart, you use all type of indicators, but when the market price is clearly showing us at certain key levels based on where the take profit and the stop losses are, we're not paying attention to those. Remember, every single person who bought is in profit, right? But you cannot deny the fact that the market even gave you time or even gave you hints to say something wrong. The moment I saw market price go back below 50, and it's clearly failing to re-break it. I'm not even waiting on more consolidated structures to form. Any money that I had, matter of fact, by the time it breaks it, and then this would be my grace period. Let me show you my grace period because I'm not going to pretend like I'm perfect. Because everybody wants to see their trade reaches their full potential. Some of you said you take profit to $200, $500, and you're on a micro lot. The market maker is mindful of all of this. You see, right here, so there's room for forgiveness up till this point. But right here so was where you should have smelled the coffee and realized that something is seriously wrong. This is a lower high, right? Let me just type it out for you quickly. LH, lower high, right? Price then went below again. What you're seeing is rejections, right? These are rejections, rejections. No matter how stringy it look, the point of the matter is rejection. Now, each rejection, let me show you what's happening. Sellers, sellers. It's like I get a bag of stone and you're holding a bag and I keep adding more stones. What's happening? You're gonna see your hands getting lower and lower because you're not supporting that weight. It's getting too heavy for you. So eventually you're gonna drop it. And so said, so done. So yes, the market maker gave us time. Now, if I were to take it a step further, let's say you was being stubborn. Even if you were being stubborn, let's hope that in your stubbornness you would have drawn a line right here. So inside of the overall. So range within a range within a range. You would have quickly realized that inside of the bigger sell that took place and the correction attempt, One more AMD model got set up right here, so right in front of you, but many of you didn't pay it any mind because the market price, upon consolidating here, the market price then went and shot up, giving the impression that it was going to, re-enter this area, causing many persons to sadly buy here. But then here was where the market was showing you that, listen, I'm not going back up now. See, sell, sell. And then the low that was made. So the stops are those guys who bought smart money, their stops get ran. Now, this is a wonderful opportunity for many of us right now. The market price, back to the 4 hour, the market price is clearly going after some long targets. If this breaks, right? Yeah. If this breaks, then obviously we have to look down to here. Potentially, market price is heading for September month low. Oh, that's a line that I deleted. Oh, shoot, I shall label it better. See, this is why navigation is important. I just quickly took a look at right here, so at a previous labeling that I had, and I realized what line I deleted earlier. So I have to go draw back this line. So monthly highs, weekly highs, especially monthly highs and lows of the previous month, very important. Now, a lot of guys are in profit down here, so this is around the month of September. If this breaks, we don't see any attempt at market price correcting back up, then selling time continues. That's so simple I can put it. Selling is in fact going to continue. All right. Tend to look at the bigger picture. There are orders on this. This is a sweet look sell off. I'm looking for a pullback. But if we cannot see this area holds, we're going further south. All right. So in conclusion, this is algorithm discussion part one. Hope you guys enjoyed this. My mentoring course is available. You can join the Discord group, DM me, or send me an email for more information. I have two packages, one for beginners who are just starting out in Forex, and one for those who are already in Forex but need to learn this algorithm. And two different price packages, payment plans are available. Payments available via Skrill, PayPal, Zelle, and a direct bank transfer. So just inbox me, let me know if you mean business, and trust me, you won't regret it. I'll be telling you stuff that I even dropped here. Just giving you guys some core basics to start you off. All right, Forex is an algorithm. It's all time and price. There's no beating around the bush. Once you have understand that and got that in your head and you're doing your navigations properly, understanding where the stop loss, overall liquidity is at, it's gonna become clearer to you and your psychology is gonna be at better ease. Hope you guys enjoy this. Peace and God bless. Gonna end this right about now.